Hello, guys. It's Trevor Carlson again at Heritage Reverse Mortgage. We are Southern Utah's reverse mortgage specialists. It's been a few weeks since I recorded a video with one of my articles, and so I wanted to get back on that today. The article I wrote today is trying to take a little bit more objective view. Of course, everybody always asks, what are the risks or the red flags of a reverse mortgage? And so I wanted to just be open and upfront today with what I think are the primary risks of doing a reverse mortgage. And so in the article today, I explain that the primary risks of a reverse mortgage revolve around the idea of the unknown, of what could happen tomorrow that you at this point have no idea about, right? Things like divorce or market collapse or assisted living facilities, those kinds of things. Anything that could change your goals tomorrow from what they are today. And so with a reverse mortgage, I explain in the article what some of these downsides could be and how, working with a better planner, you could navigate them to make sure that you're doing the right thing for yourself or somebody you love. And so in the article, the first thing I talk about is how long you plan on being in the home. And my recommendation here is that a reverse mortgage is either a short-term solution of 5 to 6 years or it's a permanent solution. Because what's happening is that because you are no longer making a mortgage payment, the interest that's accrued every month is being added to the balance of the loan. And so your loan balance is going to tick up slowly every month, right? The nice thing is that within the short term, you're adding less onto your loan than you're actually saving in your mortgage payments. And so if you're using that cash savings wisely, then you're really not out anything. You essentially just break even in the short term. Likewise, on the opposite end of the spectrum, if it's a permanent solution, it's great because you know it's your home. No one can take it from you as long as you're paying your taxes and insurance and you stay in the home. And so knowing that this is your home forever is really a comforting solution. The problem is somewhere there in the middle. Anywhere from 10 to 15 years, that's where it becomes an issue because over time, as that interest is growing, it's taking more and more of your equity. And that's not so much a problem in and of itself. The problem is that it begins to limit your options moving forward. What I mean is that if in 15 or 20 years you decide you don't like the home anymore, you want to relocate or downsize or something, at that point you've lost a lot of equity. And it's going to be really hard for you to get enough out of that home to be able to buy a new home. And so that's why I say looking forward at your life, if you don't really know where you're going to be in 10 years, you may want to hold off on a little bit longer before jumping into this decision. Other things I talk about is breaking with tradition. We are trained, our parents, our grandparents, our great-grandparents, everybody has always taught us that the key to life is you want to pay off your mortgage, have a big party, and then give that house to your kids so they can live in it when you die. The reality is it just doesn't work like that anymore. Kids don't take over their homes, the homes of their parents like they used to. And so what usually ends up happening is that the homeowner will pass away. The kids will just sell the home. And statistically speaking, the odds are that the inheritance they'll receive will be gone within 12 months anyway. And so I say this is a red flag. Because if you can really examine yourself and your personality, and you can imagine that every month you're going to get a mortgage statement and that balance is going to be a couple $100 higher, if that causes you anxiety, you probably shouldn't do a reverse mortgage. Likewise, if you go with the line of credit and it causes you anxiety to think that once a year that interest rate could adjust 1/4% or 0.5% or whatever, if that causes you anxiety, again, you should probably just look at the fixed rate option. And so my final recommendation in the article is that please work with somebody who knows what they're doing. Please work with a true reverse mortgage specialist, somebody who cares more about you than they do care about the money they're going to make by doing your loan. Somebody who will really sit down and take time with you to answer all of your questions, to look at the future with you and your goals and your needs, and ultimately will make the best decision for you and will make the best recommendations for you and will put your interests above their own as they're working with you. And so if you don't feel that with your professional or the person you're working with, please shop around. Find somebody that you feel good working with. If you do have questions, This is the kind of person I try to be. This is the kind of professional I try to be, and I would love to help you or somebody you love. So give me a call at 435-359-9000 or visit us at heritagereversemortgage.com. Thank you guys. Have a great weekend. We'll talk to you soon.